welcome to our first in-person SA Stock Picks powered by the JSE. We are streaming live from LeaderX at the Central Convention Center. My name is Vuyo Lee. I'm the Director of Marketing and Corporate Affairs at the JSE and your host for today's session. It really is amazing to have you all here in person. And to our loyal online audience, a very warm welcome to you. Today marks the 9th edition of our SA Stock Picks powered by the JSE. This is a dynamic educational series for investors, whether you are a beginner or a professional, where we bring in leading industry experts who are right here with us, who will share their picks on stocks and also other financial instruments that you can consider for your investment portfolio. And speaking about our panel here, we've got today Carmen from Absa Asset Management, Petrie Hayes from Nerina Capital Advisors, and Nerina from ETFs. Thank you very much for joining us here today, and a warm welcome to you. It's quite important, audience, to know that the information provided in this series by no way is financial advice, and the views expressed by our panelists does not reflect the opinion of the JSE. For those who've watched the SA Stock Picks before, you'll know how it works. But for the new people online and also in the audience, our speakers have about 8 minutes to share 3 of their stock picks or financial instruments that are traded on the JSE. They will also share why they are picking those stocks or financial instruments. And then you, the audience, have an opportunity to ask them questions about their picks or your most pressing investment questions. When you're asking the questions, we'll ask you to please limit your questions to the financial instruments traded on the JSE. And we will try to answer as many questions as we can online and also in the audience. So the people online, please do start sending your questions right now. We will ask them after the speakers have gone through their picks. And then we'll then go to the audience where you'll have an opportunity to ask your questions. So Nerina, we will start with you. Thank you very much, Nerina. Could you tell us a little bit about yourself, your organization, and then we'll then get to the picks.
Thank you very much, Vuyo, and thank you very much for everyone here in person and also to the online audience. My name is Nerina and I represent ETFSA.co.za. It's all in the name, Exchange Traded Funds South Africa. There you have it, ETFSA. We are specialist investment solutions providers and financial advisors, all focused exclusively on exchange-traded products, all listed on the JSE. So we are both an information hub in terms of providing information, but as I say, also financial advisors, and we manage investment portfolios for a range of clients, all exclusively using exchange-traded funds. Thanks.
Thank you, Nerina. So let's start with the basics. What are exchange-traded funds or exchange-traded products? What do we need to know about them and the benefits of investing in them?
So an exchange-traded fund, for most part, is also a unit trust. Many of you might be familiar with unit trust as a great way to invest in not just a single stock or a single share, but in a whole basket, a whole index of investments that you would be exposed to. The exchange-traded part of the name, ET part of it, really talks to where do we buy and access this investment. So an ETF is an exchange-traded fund listed on the stock exchange, and the underlying fund is quite a broad range of different ones that we can buy. You know, in South Africa, we've got over 1,600 different unit trusts. We are sitting here today with almost 180 of these also listed on the JSE. So think of these really just as a different place where you would buying a unit trust. And the underlying investment typically is an index. So many of us are familiar maybe with the top 40 index. So you can buy an exchange-traded fund that with a single transaction on the JSE gives you exposure to the 40 largest companies on the JSE. But it's not only South African shares or stocks that you can buy in this way. It also covers other asset classes. So one can also buy bonds, government bonds, for example, or listed property shares, or even physical commodities, things like gold and platinum. And I think for many South African investors, a great advantage that you can also buy foreign investments, global investments, but with a familiarity of the JSE. So on your local stock exchange, you can buy an ETF that with a single trade, for example, gives you an investment exposure to the S&P 500 index, which is the 500 largest companies listed on the New York Stock Exchange, or the MSCI World Index. That's over 1,800 different global companies in 23 different developed markets. So what an ETF really gives you is that efficiency that with a single trade on the JSE, picking just one thing, not a stock, but picking an ETF, you're actually getting the investment efficiency of being invested in a very broad range of companies or underlying investments. So really sort of making investment access open and available to all.
Thank you, Nerina. So what I'm getting is a basket of assets, very convenient, at a low cost and a high convenience as well. Thank you very much for that. So what is your first ETF or ETP stock pick for today?
So, you know, it's almost 22 years since the first ETF was listed on the JSE, and many of you might have heard of Satrix, and specifically Satrix 40, which was the first ETF to be listed on the JSE. And as I alluded to it, that gives you exposure to the 40 largest companies on the JSE. But over the last 22 years, we've seen significant development. And my first ETF pick for today is actually not a stock pick, in other words, not buying shares in companies, but an ETF that will actually give you exposure to South African government bonds. So I've picked the ABSA New Funds Government Bond ETF, share code NFGOVI. And the reason why I pick this is that we find ourselves globally in high levels of uncertainty around economic growth, around inflation, interest rates, and also the performance of more traditional investments such as shares. And what you get when you invest in a government bond is in South Africa, our government actually pays very high fixed interest rates. So the average interest rate that we are getting on the government bonds is somewhere between 8.5% to 9% per annum of guaranteed fixed interest. So this is irrespective of what happens to interest rates, whatever happens to the world economy as it is, that's a fixed interest rate that you will be getting. So it's a very attractive investment for somebody who's looking for income, specifically interest income in their investment portfolio. And I think the other major benefit of it is that typically for an ordinary investor to get access to bonds, you would only be able to buy the retail savings bonds. Great investments, but they come with a lot of rules and, you know, you're sort of tied in for 3 or 5 years at a time. Whereas buying a bond ETF allows you to have the flexibility that you can trade them just like any other share on the JSE. You can trade them at any time, any day that you want to. So that's my first pick.
Thank you. And I guess with the high interest environment, this is really a good benefit of investing in the bonds.
Absolutely.
Great. And then in terms of international assets, I mean, you mentioned earlier on that the benefit of an ETF is that you're not only restricted to South African assets. So what international bond or ETF would you recommend?
So I've mentioned something like the S&P 500 or the MSCI World, and there's the NASDAQ ETF. So yes, there's a broad range of ETFs available that give you exposure to, let's call it the vanilla, the well-known global companies, you know, your Apples and your Microsofts and so on of this world. But my stock pick or my ETF pick in this environment today is the Satrix Global Infrastructure ETF. The share code STXIFR. Now, the Global Infrastructure ETF still invests in companies. It buys the shares of companies, but specifically it only invests in companies that are involved in massive infrastructure development projects. So companies that are involved in building railroads or are involved in building ports and harbors, even putting on cell phone tower networks, these sort of things. And as much as we are aware of the fact that we need a lot of infrastructure development and investment in South Africa, it's certainly true globally as well. So by investing in the Satrix Global Infrastructure ETF, you are participating in this theme, this trend of infrastructure investments globally. But I think the other big benefit of that, if you combine that with maybe more traditional global investments like an S&P 500 or an MSCI World, you will be buying exposure to companies that are very different than those big names that you're aware of. So not only is it a good investment theme for me, but you're also getting very good diversification in your investment portfolio by making use of such an ETF.
That's wonderful. Just a last thought, you mentioned ETN. Could you just give us a recap of what the difference is between an ETN and an ETF?
Great stuff. So they sound very similar. ETF being an exchange-traded fund, ETN being an exchange-traded note. The biggest comparison between them is they're both exchange traded. So you're going to be buying them on the JSE in your normal share portfolio as you would do any of the other individual shares. But the big difference between these two is that the fund actually has a physical underlying fund that owns the assets that you are invested in. And as an investor in an ETF, you effectively have part ownership of those assets that sit inside the fund. In the case of an ETN, you don't have that ownership claim on it. You are effectively buying a promise from a bank, an issuing bank that says, I will pay you the performance of the specific reference asset or underlying investments, but you as an investor don't have ownership of that. Now, it might seem that this, that might sound a little bit weird or wonderful for you. Why would you do that? There are some very specific cost benefits and other benefits also to ETNs rather than ETFs. So I certainly want to encourage people to explore that aspect of the market as well, because it also gives us the opportunity to get exposure to investments that we wouldn't normally otherwise have exposure to. So in this space, I'm really going to be stretching you now in terms of my stock pick or my ETN pick that I want to share with you today. And there's a lot going on here, so hang on. I'm going to recommend to you the FNB iShares Global Clean Energy Quanto ETN. I'm not even going to repeat that. The code for that is EGETNQ. By the way, if you want any information in terms of what's inside any of these ETFs or ETNs, etfsa.co.za, the website, really the most comprehensive website available in South Africa that will give you all the underlying information of all of these. But let's get back to my ETN pick that I've got. So in this particular investment, what you're getting exposure to is the global clean energy sector. Once again, investing in companies, but companies that are specifically involved in this energy transition that the world is undergoing. So companies involved in solar power, in wind farms, in technology that is used in the energy transition. So a wonderful long-term investment proposition to really participate and enjoy some of the benefits of this energy transition. You're buying it as an ETN, so you are not owning this, but you're getting the full benefit of the performance. But the other very important point that I want to bring out is this word quanto in the name. So FNB, who issues these ETNs for us on the JSE, have got two versions of each of these ETNs. There's a compo and a quanto. I like to think of compo as a combo, a combination, because these are all global investments that are dollar denominated, and you're buying them on the JSE in rands. So your performance of that investment is going to be a combination of the dollar performance of the underlying investment, but also the rand-dollar exchange rate. The Quanto version says, I just want to get the dollar performance. I don't want to get the rand-dollar impact as well. And for us who's lived with a depreciating currency over a long period of time, might say, that doesn't make a lot of sense. But we also know that the rand doesn't only depreciate, it can strengthen. And where we find ourselves in the world at the moment is that the dollar is exceptionally strong. So if you are of the opinion that the dollar is going to weaken and the rand is going to strengthen over time, you rather want to be invested in the Quanto version, not the Compo version.
Thank you, Nerina. Quite a lot of information there. And there you have it, ladies and gentlemen, over 180 ETFs or ETNs to invest in. Just one question that has come through so far, so I am going to take the opportunity to ask you, Nerina. Are there any renewable energy focused ETFs?
So not directly, but actually exactly what I was speaking about now is exactly that, is renewable energy. So even though you don't see the name renewable energy in that, it invests in companies that are in clean energy, which almost by definition means renewable energy. So that really is probably your best opportunity, and it's not just South African renewable energy, but very much global renewable energy.
Great, thank you very much. And ladies and gentlemen, should you wish to invest in ETFs or ETNs, please consult your financial advisor or your stockbroker to open your account. Thank you so much, Nerina. Carmen, over to you. Welcome back. Thank you very much for coming on board again. If you could just introduce yourself and then go straight into your stock picks. Thank you.
Thanks. So I'm Carmen. I come from ABSA Asset Management. I am a portfolio manager within the equity cluster, and I also oversee the retail and healthcare sectors.
Thank you, Carmen. So you've been here before and you had picked some retail stock in the past. So it'd be interesting to hear what your new stock picks are. So over to you.
Okay, thank you. I'll start with the retail stock that I have substituted. Previously, I had recommended Mr. Price as well as Pepcore, if I remember correctly.
Yes, correct.
So I've swapped that out, and I'll give you a bit the explanation behind that. My new stock pick is for the Foschini Group. I think the main reason for swapping the other two out has been a sort of trading within a very limited range. The basis back then was focused on a consumer who is struggling in South Africa, rising interest rates, rising cost of living, rising fuel prices, etc. And the view was that the consumer is likely to downtrade. And downtrading would lead to more value offering, which is Mr. Price and Pepcore. However, I've now substituted that to the Foschini Group, and the basis of that is more on a geographical diversification, number one. But number two, they've now added a value offering within their basket as well. So they have bought the Jet cluster about 18 months or 24 months ago, and that has been doing really, really well for them. Adding on to that as well, that we're seeing a clawback once the pandemic has sort of gone down, and we're seeing that the economies in Australia and UK are reopening. There still remains concern around the potential for growth there, but at the moment we've seen the latest results have come out and they have been the leading performer across the sector in terms of performance, driven by this consumer who is under pressure but continues to purchase, whether it's on credit or cash. We are seeing a turnaround and some tailwind on that side. And I think that the market has not pulled that into the share prices yet. So it remains quite weak relative to its historical performance. So I think that this is an opportunity to definitely look at Foschini.
Great. And your next pick?
Okay, my next pick, again, another laggard, I think, in terms of performance and what the market has done. My next pick is MTN. It's a new one into my stock picks. The basis for this is the market had punished MTN for a while a few years ago based on its exposure to Nigeria and various other African offerings or assets. And then obviously remembering it's probably one of the biggest and best performing in South Africa as well. We've seen the recent results where they have managed to outperform both Telkom and Vodacom in South Africa. They've managed to restructure or at least restructure their balance sheet in Nigeria. They've managed to de-risk that. They've managed to repatriate money out of Nigeria, which was one of the key risks a few years ago. And currently trading at probably the cheapest level compared to Vodacom and Telkom. So I think that the market has been overly punishing MTN for a few months. It has pulled back quite significantly. Again, trading relatively to its historic levels, as well as to its peers in South Africa, trading very, very low. In terms of balance sheet, they've managed to strengthen their balance sheet and get that leverage level down to below their 1.5 times target. And adding on to that, the estimation by the market is that they'll get to a net cash positive position by 2024. Management have also shown key and strong ability in terms of their capital allocation, and that's come through in the earnings. So I think that at this point, and with the overhang of the potential Telkom deal, generally going into any M&A deal, the acquirer gets the brunt of the pullback in the share price, while the target, as we've seen, Telkom has really rallied since the announcement. And they're almost trading at the same level. And if you look at the two companies, complete opposites. So I think this is a key opportunity to get into MTN.
Do you think with the acquisition of Telkom that has already been priced in, or do you see more value unlocking out of the acquisition?
So it's a good question, and we've got to remember that it's got to go through a lot of regulatory hurdles. So I think there's going to be a stumbling block in terms of spectrum, number one. That's definitely going to be an issue. There may be a carve out because you don't want there to be a monopoly. And we already know that it's defined by the 3/ maybe if you want to add rain as well. the three biggest telco companies in South Africa. So I think with as I've mentioned, because of the potential deal, that they've actually had a pullback in their share price as opposed to a gain. So I definitely think that there's likely to be some synergies. And as I've mentioned, management have really been good at capital allocation. So I think that there is potential for some tailwind there.
And what would your target share price be for MTN? Putting on the spot here.
You are definitely. So it's currently trading, I think, when I checked this morning, at about 136 or 137. I would hazard a guess and say at about 180, 190, you'd be good to go. Yeah.
So quite a lot of value to unlock there. Thank you so much, Carmen. And your last stock pick?
Okay, my last stock pick, Nerina, please don't judge me. It's very controversial, I've kept it in from the last time. It's Thungela Resources, which is a coal-focused company. It was spun out from Anglo-American Stable about 18 months ago, if I remember correctly. So the antithesis to Nerina's Clean Energy Fund. Having said that, as an investor, it's always important to look at where there are opportunities. And the key with Thungela, when I first recommended it, it was trading at 170. It's now at 375, so I'll take that win. But I'm being brave enough to keep it in, and the basis of my argument is the war in Ukraine and Russia, as much as it's been devastating for the region, has been a phenomenal tailwind for coal prices, which are trading above, I think at last check was above $305 a ton for thermal coal. And if you look at the pricing of Thungela, even at this high level, it's still trading at it's incorporating a coal price at probably half of the current 305. So that's my first point. Second is, if you compare to other mining and resource stocks, also very, very cheap in terms of on a relative basis. Excuse me. And then thirdly, and probably the last point, is definitely the potential for those who are looking for a company that gives a significant dividend yield. So we'll see at the last results a few weeks ago, they came in at a 60 Rand dividend, and the expectation is that in the next half, they're likely to exceed that significantly. So I know that it looks pretty ambitious in terms of how the share price has moved. It's up over 340% for the year. But on the basis that the war is not ending soon, there is an energy crisis in Europe. We are seeing China putting on a lot of their coal-powered fire stations again. So I think there's lots of support for this coal price. So that's my third pick.
Thank you very much, Carmen. So what we have is MTN in the telecom space, the Foschini Group, and also Thungela, which sounds like a good punt right now. So thank you very much, Carmen. Petrie, our Rose on the panel. Over to you. Please share a little bit about yourself, and then we'll move on to your picks.
All right. Firstly, thank you very much for having me here. I'm in very esteemed company as well. So it's an honor to be here. Also, TGA, biggest holding in our portfolios. Nice. Followed only by Sasol, right? So my name is Petrie. I'm the founder of a company called Nerina Capital Advisors. We're a niche type of stock brokerage firm. We started, almost 7 years ago now? If it's been that long, it's hard to believe. And we started off sort of focusing really on the more active traders in the market. So we have a very specialized stockbroking service offering for very active and semi-professional traders. And as time has gone by, we've expanded into eventually get an asset management license, and we now have a number of different portfolios that we run on behalf of clients. So an offshore portfolio, which is our flagship, not the topic for today, unfortunately, and then a local portfolio as well, and then a more actively traded sort of speculative portfolio, which is the smallest of the three. In general, though, that's the roundup of Nerina. My stock picks for today, I'll sort of just list them briefly and then get into them one by one, are Aspen Pharmacare, Sun International, and a company called Jubilee Metals Group. So where would you like me to start?
I'm very interested in Jubilee Metal Group. I don't think a lot of people know that stock, so maybe share a little bit more about that one first.
All right, so Jubilee Metals Group used to be known by the name Jubilee Platinum. The share got absolutely destroyed. I think they are still the owner of one of the biggest platinum deposits in the world, but also under an extremely thick layer of granite, so it is almost impossible to get to it, right? what they've done in the last, what has it been, 5 to 7, maybe 10 years, is reinvent their business in a way that they are starting to reprocess waste product. So generally when a mine, mines a particular mineral or PGM or metal out of the ground, they dig up a whole bunch of this, rock, put it through all sorts of processes, chemically treat it, crush it into small pieces, and then at the end of the, at the end of the process, they manage to extract the metal, and then the waste product, which is generally small little stones, gets thrown on a pile, and that becomes, a mine dump or whatever the case is. Jubilee Metals Group has spent a number of years working on a newer technique of reprocessing those tailings, that waste product that these traditional mines form. And in fact, they've gone ahead and they've got a number of contracts with some of the platinum mines in the Platinum Belt in South Africa to take these mine dumps and reprocess them. And they can put those tailings through their, proprietary machinery and processes and actually extract about as much PGM or mineral or metal from that stone or from those tailings as what the mine originally got out in the first place. In other words, they can get the same yield that they got from, that the original miner got from the tailings, or before it became tailings. So from the original ore, let's say it got 5 grams per ton, they can get out 5 grams per ton out of the tailings. So 5 grams, don't quote me on that, but these are, it's sort of testament to how efficient their process is. So they've got essentially the ability to create very high return with almost half of the mining cost. So they've got a lot of deals with some of these platinum miners to essentially, they don't even pay for the construction of the plant, but they then split the profit with the mine because we process your waste product and we split the profits, right? Not only that, they also have now started putting up their own mines as well. So locally they have a mine. In Zambia, they've been focusing quite a bit on a copper mine, which has now very recently come into full production. There's big investments that they've put in there, and for the first time in the last few months, it's actually reached the point where they are happy to start running, I think it's 110 tons an hour through that plant. And they expect to produce something like 3,700 tons of copper by the end of December and something like 10,000 tons of copper by the end of June next year, with the option, with the goal of producing 12,000 tons of copper from just that Zambian mine within a sort of rolling 12-month period, right? So from a mining perspective, I think that this is a company that is focused on a lot of the PGMs, which we know have a lot of value, particularly platinum, catalytic converters, gold. These have industrial application, as well as the more rare earths. So you're looking at cobalt, vanadium, all of these types of metals that are being used in the production of batteries. So to back the clean energy idea, these are transitional metals that we need in order for battery and sustainable energy production and storage. I think the Jubilee Metals Group is very well positioned to do that more efficiently than what traditional mines or mining companies currently can.
Thank you, Petrie. And an interesting one is at just under 3 Rand per share, you can give up your morning coffee and have at least five shares.
5 shares, yeah.
Right? So it really is a stock that is affordable to everybody.
And I think the real allure of this is that if you look at where it was about 3 or 4 years ago, it was trading under 50 cents at the time. And the projection was that this thing is going to ramp up its earnings by 100-fold in the next 10 years. And it seems crazy, but it's on track to do that. 5-6 years ago, they didn't have the Zambian operations. They weren't producing as much PGM as they are at the moment. And I think that if they continue to bring their projects online and these, the production targets are met, I think that this company is a real sort of 10-bagger, even from 2.70 Rand.
Wonderful. And it's also great to see a small cap make it on the stadium. Talk about Sun International.
So Sun International, essentially, it's more of a casino business than it is a hotel business. 80% of their revenue comes from gaming, right? So this includes slots and casinos and all the rest, right? But they are also, obviously, primarily we know them as hotel group, essentially, because that's what we face. But the flagships of their portfolio are the hotel casinos, right? So I think this is more of a recovery trade, so it's more of a medium-term stock pick. You might want to be invested in this for the next 5 years rather than the next 20. But essentially, I mean, the global tourism industry was absolutely smashed by the COVID pandemic and the lockdowns and all those various types of things that took place. And we're starting to see a real recovery in not only tourist activity, but also a company that's busy restructuring itself, getting rid of the unprofitable investments that they have, or the hotels and the properties that they have that aren't doing very well, focusing on their core income generative properties and business, which is essentially the gaming business. And we have, well, a number of different things. One, the end of lockdown, so people are starting to travel again, and you have a lot of corporates that are keen to create a little bit of, I want to say chias, is probably the wrong word, some goodwill amongst their staff, so organizing events and little trips away and that type of stuff. Plus, there is the opportunity of economic hard times. So it sounds crazy, but we will not be traveling offshore for our holidays because flight tickets are too expensive. So what are we going to do? We're going to travel locally, right? So that recovery in tourism, post-pandemic and also heading into a more difficult economic time, means that we'll probably focus a lot of our travel locally, and I think Sun International is well positioned to do that, or to take advantage of that at least.
Thank you, Petrie. It is true, more local travel is good for the economy, so hopefully we'll see Sun International benefiting from that. Aspen?
Right, I see that I'm running out of time, so I'll try to be brief
Okay.
as well. So Aspen Pharmacare has a bit of a history of making acquisitions and buying a new drug or a new license to a drug, and the company then rolls that into its earnings and makes a huge amount of money, and the share price keeps going. This happened for a period of 2 or 3 years. It was Aspening again. It just kept going and going, right? Every time they did a deal, the share price went up. Thereafter, we headed into a very difficult period for Aspen. The share price has now come all the way back down to about 140, 150 Rand, where it's trading at the moment. We saw briefly during the COVID pandemic a lot of excitement around Aspen and a very strong share price movement, all the way up to around 280, I think, was the high. And that was on the back of the production of the COVID vaccine. So, yes, now we're in a situation where COVID is no longer around. But if we remain future-orientated and keep thinking about, what's down the line for this company, they've invested a huge amount of money into essentially building a vaccine production facility or a plant. It's like a factory. It's massive. In Kubega. I'm not sure how to say it. Kubega. And essentially what they've done is they've obviously got the license for the COVID vaccine, or one of the COVID vaccines at the moment, with the license to not only manufacture, but also distribute this throughout Africa. So this is just essentially the first of many. There are other vaccines. I can't remember the exact name of the vaccine. These medical terms are sometimes very difficult to remember, but there is a new vaccine that they have essentially secured a license for very recently in the last few weeks, which will be the first of many of these deals I think that they'll be doing in the near future or in the coming years, where they can now take vaccines that were normally traditionally difficult for the continent of Africa to get their hands on and start producing them locally and then distributing them into the rest of Africa, and obviously within South Africa as well. But the total market here is not just South Africa, it's sort of broader the continent, right? So I think that is something that is really going to help them grow, and we might go back into that phase where we see Aspen going on this acquisition trail again, if you will, of getting licenses to produce new types of vaccines here. And yes, okay, it started with a COVID vaccine, but it certainly does not end there. There are lots and lots of different vaccines. I think they've got about 8 deals in the pipe, if I'm not mistaken, at the moment, which could obviously, with every one of these, will add to their earnings, and they start sweating that new asset that they spend so much money producing.
Thank you, Petrie. Ladies and gentlemen, we are going to go in our Q&A right now, so please do think up your question. And while you're thinking of your question, Petrie, could you give us a sense then of what your target price would be for Aspen? I guess a lot of people have been concerned about the stopping of production at Gqeberha due to low demand, and there's more opportunity. So what is the upside here?
So I'm going to cheat a little bit. I'm going to count on the charts, right? So we've seen Aspen come down from around 280. It's been consolidating between about 120, I think is the low of the range, to 150 being the high. It's been in that consolidatory phase now for about a month and a half. If we break above the 145 region, I think we have clear skies to about 200 before we find resistance. Once we start seeing, and this is about a 6-month time frame for reference, so it's not within a week or two. But if we start seeing a ramp up of production and we start seeing new vaccine licenses coming in and they start actually using that facility as well as they could, I think we could see 250 and up within the next sort of 12 to 18 months.
Thank you very much. Ladies and gentlemen, it's Q&A time, so please, if you want to pose a question to the panel, please raise your hand and somebody will come to you. We see no questions coming through from the online audience, so we will go straight into the floor. So any takers? There's a gentleman at the end on the left who's a question.
My question is for Nerina. What are the historical returns from the global infrastructure fund that you've been planting that you could share with us to suggest these guys know what they're doing?
So I certainly don't have the numbers on hand, but I can tell you that on the ETFSA website, we run a monthly performance survey that gives you the historical performance of every single JSE listed exchange traded product. 1 month, 3 months, 6 months, 12 months, all the way up to as far as it's been there. So I don't have the specific numbers to quote you. But what I can tell you is that it's been one of the best performing investments over the last couple of months, certainly, and during this time of massive global turmoil and where we saw the traditional large companies that make up the like of the S&P 500 and the NASDAQ index, we've seen it significantly outperform that. And I think what we're really buying into here, this is not about do these guys know what they're doing. Rather, with an ETF, you are buying into the exposure of a specific investment theme. And the investment theme that we want to buy in is not about what happened in the past. It's all about where are we going in future and the massive demand and requirement for infrastructure development, infrastructure investments, and these companies are all positioned to provide that massive demand globally. And it's more on that premise that I'm interested in buying it, rather than saying what was the performance in the past. Because past performance in this kind of case for me is like driving your car by looking in the rearview mirror.
Yeah, but Nerina,
yes.
Just one more comment on that. If you are in a great sector, great theme, prospects, etc., and you're a lousy asset manager, you're still going to give us a Steinhoff proposition one morning, won't you?
So I'm very pleased that you mentioned that, because there's actually no asset manager involved here. This is an index that looks at the largest companies globally in the infrastructure sector. So with an exchange-traded fund, especially if it tracks an index, there's no asset manager that sits there and says which of these companies are the best positioned. We heard great comments from Carmen and from Petrie in terms of how an active asset manager would try and select within a particular theme or a sector what the investments are. ETFs and index tracking investments said, I'm not going to try and predetermine which are the best investments within that theme, but rather to say, I'm going to buy the whole theme. I'm not going to try and find the needle in the haystack. I'm just getting the whole haystack, because then I know I get the needle as well. So there's no asset manager that one morning is going to wake up and say, okay, now I think company A is no longer the best prospect within this theme. Company B is the better one. It is all focused in terms of the big, large global companies within that sector. And as new companies come about, or as companies grow in size, so they will be incorporated in that. And you don't have to then sit and say, how do I select the new kid on the block or the next one that's going to come? It is automatically included in that index for you, and you get the benefit of both the old incumbents, the companies that have been around for a long time, but also the young upcoming companies in that particular theme.
Thank you, Nerina. And just before we go to the next, I guess it's worthy to ask the question to Carmen, when you are selecting a stock, what you need to think about? We talked about past performance, but what are the other fundamentals to consider?
Thanks. Thanks for you. It's quite intricate, but in a high-level nutshell, it's impossible to look at a company without understanding the environment that it works in. So as much as we look at a specific company and build a model for that specific company based on fundamentals, history, it's quite important to add a macro level, so the top view as well. I've mentioned earlier the war in the Ukraine and Russia. Those things all have a specific impact on valuations and the market in general, and certain sectors more so. So that's another aspect. And then I also touched on MTN and our view in terms of management and our confidence in them. It's so vital that you find a management body that, number one, you can trust. So what they have said in history, have they managed to meet those guidances that they've given before? But also, if not, were they able to self-correct, self-evaluate and steer the ship back to where it should be? So at a very, very high level, that's another two that I think are vital in terms of valuations.
So it's the macroeconomy, but also confidence in the managers. And any other things we could think of as well in terms of research that we can undertake when you're venturing out on your own?
Nerina's touched on it before, and I think diversification is quite an important thing. So it depends on what your portfolio or your personal portfolio or value investment holding looks like. You don't want to be, loaded towards telcos only, because if that sector goes down, you lose everything. So I always say diversification is very, very important. And then also for anyone, it depends on at which stage of your life you are. I know I'm getting a bit more technical, but if you are in a later stage of your life, you want to be more secure in what your investments are, so that the risk isn't as high. So then maybe you'd look at what Nerina said earlier, going in more into bonds, which are more are less risky, should I say. And then if you're in an earlier stage of life, you can be a little bit more riskier because you have time to catch up if you make any mistakes.
Great, thank you. Any thoughts, Petrie?
If I could add a little bit something to this as well, I think it's very good. As you point out, we have to look at both the macro picture and the company itself. And I think, just to echo, some of your thoughts, if you have to understand the business and how it makes money, right? So if you want to invest in TGA, for example, or Tungela Resources, if you can't figure out how this company makes money and what the threats are and what the dependence is on what currency, and why is TGA doing so extremely well right now? Well, because they're selling coal hand over fist to Europe, right? So you have to understand the business that you're invested in, understand how they make money. So one of the things that we would do, for example, if we take on a semi-professional trader who wants to go kind of full-time, is we make them do a project on the top 40 index, and we say to them, look, break it down. We want to know, if you're looking at Anglo-American PLC, where are their mines? What countries do they mine what resource from? How much do they earn from what resource and what's currency? So if there's an earthquake in South America, how does that impact Anglo's share price or their revenue, right? So understand the business. And if you understand, that's the key, I think, that you're mentioning, is that fundamental analysis, building a model around how does this company make money? And it sounds very technical to build a model around how the company makes money and all this stuff, but really just, break it down. And one of the advantages, or one of the things is, to think about is, if you have enough money to buy the entire company, all of it, would you? If the answer is no, then don't buy even one share, right? But if you can afford to buy all of it, like if I could buy all of ShopRite, believe me, I'd buy it, Obviously I can't, so I just have a few shares.
Petrie, I think you just snuck in another stock pick there, ShopRite. Are there other questions from the audience? Sir, on the left, and we've got 1, 2, 3 more people here. If there is another mic, please do put it on the right side of the audience.
Hi, Nerina. This question is posed to you. I recently heard that the JSE will now be listing actively traded ETFs. So I just wanted to know, what's the difference between a passive ETF and an actively managed ETF? And what is sort of the risk of the two?
That's a great question, thank you. So yes, the JSE recently approved the listing requirements for actively managed ETFs. The ones that we currently have and that we're most familiar with, and that's often colloquially referred to as passive investments, really are all index tracking investments. So I like to think of an index as a recipe. Basically, the recipe tells you what are the ingredients and the quantities, how much of what must be in that investment. And so I go back to that gentleman's question, who's the asset manager that decides, like, say, a top 40 index? That's a passively managed or index tracking ETF that says they're just going to buy the top 40 shares on the JSE in exactly the same proportions as they are in the top 40 index. When it comes to an actively managed ETF, it would work exactly the same as you would find with an actively managed fund, a unit trust, for example, where there would be an asset manager that would be making these active decisions. So where are the risks? The risks really lie in the ability to understand what this active process or strategy or manager going to be able to deliver. What is the basis for that asset manager making their decisions? Going back a lot to what Carmen was saying in terms of what's the track record? Do I have evidence of their ability to make good investment decisions? In the case of an index tracking product, don't know what the absolute return of your ETF or your index investment is going to be, because it will depend on the performance of the underlying shares within that ETF. But the relative risk is minute. You know that you're going to get exactly the same return from the ETF as you get from the index itself. So here we can differentiate between risk on an absolute basis versus risk relative basis. I hope that answers some of the questions.
Thank you, Nerina. We just have 2 questions that came through online. I'm going to ask those questions first because we do have time afterwards, ladies and gentlemen, to pick up questions from the audience. So I will ask a very interesting question. Petrie, if you could perhaps take this one. In light of the challenges of load shedding, are there any sectors or companies one should look at as an opportunity amid the crisis?
That's a very good question.
Very good.
I don't know whether or not there's lots of opportunity in the listed space. What I've noticed is with companies like Sun International, for example, and Aspen being another one, a lot of these companies, regulation has kind of changed in a way that private companies can now generate 100 megawatts of power privately without needing a license. And almost every listed entity in South Africa is investing into becoming, let's not call it energy independent, but they want to make their 100 megawatts of power. And a lot of these companies are group companies in the JSE format. And if you break them down, there's tons of subsidiaries in there. So a lot of them are investing in becoming, let's say, not necessarily Eskom independent, but they're not going to be as negatively impacted with load shedding as they're producing a lot of their own power. I think where the real opportunity lies, and please, if somebody knows of a listed entity that we can get access to, then please let me know. But I think the real opportunity is more in the sort of SMME space, where there are lots of companies, particularly in energy storage and solar installations and that type of thing, where there's a huge opportunity. So I know a company, for example, is called iGen. It's unlisted. It started maybe 4 or 5 years ago. They recently got investment of something like 30 million from one of the big banks, and they're just expanding. If you want to buy one of their 11.4 kilowatt batteries, good luck. The waiting list is 4 months. They are importing containers and containers and containers full of cells and assembling batteries locally. I think that is where there's a huge opportunity. The solar installation sector is adding something like 30,000 people a year going through 2 training institutions to become solar installers. So I think that there is a huge amount of opportunity there. If you are looking, the other way to access that is to look at companies, and I hate to say it, it's not very green, but mining companies, right? All of these batteries that are so green take an enormous amount of mining to get the minerals needed, cobalt particularly, lithium. These things are dirty, dirty commodities that are extremely profitable for batteries.
Thank you, Petrie. To our online viewers, Thank you very much for joining us today. It really has been an amazing session. I really appreciate our panelists for joining us. We do have time to continue with the Q&A as we are streaming live from the LeaderX. So thank you very much and have a good evening and afternoon.